Guys, welcome back. Last week we saw a breakdown of support at 408, right? And we came down to test the next level of support around 393. So we pretty much played out that C wave last week, right? If I draw the extensions from the top to bottom, you'll be able to see that, the market, bounced between the 1.618 and the 1.8 fib, which, makes it between the golden ratio. So there are two potential paths I, kind of see from this point forward. First, let's look at the, smaller time frame, and then I kind of want to zoom out into the larger time frame, kind of explain, what I'm kind of seeing in the market. So one, this is the bottom of the channel. It's being used as support. So I think whether you're bullish or bearish, the market also, has a gap to fill till about, 400. So again, 400 is a strong call wall as well. So given that 395 is a put wall, the market could very likely, I think, bullish or bearish, go back to the top of this channel, which is acting as resistance, right? Before it comes down to test the bottom of this. That's scenario number one. Number two, I want to talk about, right? Given that I want to, kind of pull up the RSI divergence and show you that given that it has been, kind of building up a little bit of RSI divergence, right? This has a lot of room to make a higher low, even if you're bearish, something to consider is that given that we have bounced kind of from that golden zone, is we could potentially have a move like this to, retest 410, 412 before, the market kind of comes down and bounces off the bottom of this channel. So this is one potential scenario that you could potentially look out for, is the fact that that we do, kind of have that oversold bounce, trap more bulls before the market, comes back to resolve this untested balance around 378. So yeah, that is the second one I want to point out. But bigger picture, what I want to say is wherever the market bounces, right, I still don't think that we're actually like kind of done with this, bigger bounce higher, because if you zoom out, you can see that if I fib the top to the bottom, right, most recent high to the most recent low, you can see that we got rejected around the 50% fib, which is the bare minimum. But there's still a lot of like unfilled supply and unfilled, gap higher. So what I potentially see is, this being your what I potentially see is, this being, your A wave, and then we're, kind of within the B wave before you kind of have that one final push higher for, the C wave. And then I'm kind of seeing a larger downward move lower. So this is bigger picture, kind of what I am aiming for. So at this point, right, I'm just watching, key support levels. Right now, we are, opening above this trend line and the support level. So again, we know if we fail this 393, the market, doesn't really have support until, 390. So kind of go level to level, right? Like, again, I showed you only the bearish versions, right? One is where we, reject this 400 gap fill, right? We come back down to retest support before we start the larger move, right? The next move down definitely will hold for a much higher bounce, right? That's one bearish version. And the other bearish version is the fact that we retest 410 and then we come back down to support to again bounce. Again, that's two, right? So you may ask me like, hey, given that we are opening above support, like, is there kind of a bull version that you also kind of see, right? For that, I do, right? If you are uber bullish, right, it's kind of a make or break area. It's a pretty good open for the week, right? Ideally, the main level you'd want to clear is 401. But yeah, the market could have, one more push up to that 429, 430 level, right? Off this level before, it heads down. So if you want a more immediate bullish push, that just means downside is likely to again come much faster, like the bigger downside. So yeah. And again, you might ask me like, like you've only showed us bearish bull versions, like what is the more immediate bear version, right? Some might argue that this entire move, right, is kind of your ABC, and your entire, B wave is kind of done, right? Given that it's moved above the 0.5 retracement, we might be, kind of in a larger C wave. So yeah, but you've still got a lot to, like kind of cross to, you know, move about. We know, again, bigger picture, the reason the market was likely going to sell off this rejection is because, right, last week we discussed how we were in this parallel channel. So a test of some lower level was definitely needed before we broke out, right? So this was a pretty obvious downside. And some people may also point out that, you know, this is a trend line right here. So we could just, you know, kind of be retesting the trend line before a larger bullish move. So yeah, I mean, there's still multiple layers of support, right? Till we kind of break this 376. And I'd say let's just give it 370, right? Till we kind of break like 370, like we're definitely, you know, not in this larger trend down to 320, right? So we definitely can still catch the downside move for now, right? Let's kind of see how we react, you know, around this 400 level. And if we reject and sell off, then again, support levels we should be watching for a bounce would be 387, below 387, 380. One of those two will definitely, you know, kind of hold if we're in a larger ABC, you know, kind of move. And obviously, if you don't see the bounce, right, and we come down all the way down to like 370 and you see a very minor bounce, then, you know, this can also be kind of considered a rising wedge, right? So the equal legs target of this rising wedge channel would kind of become at least 330. So yeah, for now, we're looking for bounce to get rejected lower. And those are kind of all the scenarios. I just wanted to run through what was going through my head, right? We don't really, again, like I said, right, don't really have any clear indication, at least even if you're feeling like super bearish, you need at least 390 to break before you have any sizable downside move, right? And if you're feeling super bullish, again, you need to break over this 407 to 408 area, right? Before you have any like significant, you know, upside. So you're kind of stuck in a range, which is why I wanted to point out all the rangey scenarios that could be possible. And let's kind of look at the dollar. Yeah, I kind of went into a much longer lengthy explanation, but let's look at the dollar, right? We discussed the breakout last week. We had a steady progression higher. So the next level of resistance is at about 105.6, but it is showing some kind of weakness already. But bigger picture, right? The reason I think I showed you the bounce scenarios first were because I think the dollar, you know, retraces it a little bit, at least back down to 103 before it has the one final push higher, right? And that would kind of align with kind of the bounce scenarios I was kind of talking about where, you know, we kind of bounce, right? And then we have the next move lower. And then when the dollar, right, go back to the dollar, and when the dollar rejects and when the dollar has a much larger retrace, then the market could have fuel for, you know, a much, you know, higher move to the upside. So it's kind of what I wanted to run through. Let's look at the wicks, right? The wicks last week, we discussed how this was the 1.618 retracement. We also knew this is the downtrend 200-day, right? Wicks, again, something that could fuel a bounce is wicks opening, staying below 22, right? It has a gap to fill at 20. So wicks moving lower, again, could be fuel for that kind of the short-term bounce on SPX. All right. And obviously, if you are very bearish on the market rate, given that Wix has, you know, broken this downtrend, if, you know, the bulls manage to hold this level and break over 24, right? I would say this level around 23.5, let's put it 23.5. This level around 23.5 is really important. Then there's honestly no resistance up to 27.8, so 28, right? So 23 to 28. Kind of a nice 20% move to the upside. We already caught, you know, 120% move. So yeah, again, to be bearish, right? Continue to be bearish on the market. You would like wicks to break over 24, right? Weakness ideally leads to a bounce. So yeah, wanted to touch upon that. With that being said, let's kind of go through this week's watch list. The first one is Meta. Again, the reason for that is if I'm kind of expecting kind of a small bounce in the market, right? Whatever level it is, right? Meta is kind of in this sideways channel. We did bounce over this channel. And if I go to the smaller 2-hour time frame, kind of broke over resistance. So as long as, you know, we kind of stay over this 169 area, like this could be an ABC move up to 179. So that would be a nice move on, you know, weekly calls, a nice $7 move, as long as we hold today's open, right? So that's the first thing I wanted to point out. And we could have two scenarios on Meta, right? If you want longer term picture, One is this bounce gets rejected and it's come down to test lower, right? With the rest of the market before it has that one final push to the upside, right? Or what we could see alternatively is if we break above, right, a more immediate bullish chart would kind of look like a break above this region. We go up to test kind of that, previous resistance at 225 before we come down. So those are kind of the two alternatives I am watching on Meta. If you go to the longer chart, right, on the daily for Meta, you'll be able to see that, again, this was the channel that it broke, right? And then we came back down, and you can see that this is kind of also a key trend line that could lead to at least a short-term bounce, but a bigger picture, right? I would say if you are bearish, obviously everyone knows that, Meta kind of has this gap down to 150. So obviously if, Meta can't stay above 160, then it's obviously going to come fill this gap back down at 150. And if it does come back down, like if it doesn't bounce and come back down, and if it immediately comes back down to 150, then I think the bounce might get rejected here, and this would kind of be where your B wave ended. But I don't think so. What I'm looking kind of at is something like this before it moves up and then it comes down. So it's kind of what I'm looking at. Meta bigger picture, and yeah. Let's look at the next one, which is FSLR. We've, discussed this many times, but it's still not broken, right? We know bigger picture. This is the longer term trend line. We know on the smaller time frame, this is kind of the parallel channel. FSLR isn't, and we've been waiting, weeks and weeks for this to break. And there's still, kind of no sign of what FSLR kind of wants to do next, right? So obviously you can see that it is on support. So till that support breaks, there's really nothing there for us. So what I wanted to point out is you can see on the weekly chart, right? The market made a lower high here, and on the weekly, it's forming weekly divergence. So again, I'm hoping, right, given that we had an inside week and we kind of had a smaller candle bar the week before, and it consolidated for, 3 weeks the week before, 3 weeks the month prior to that, FSLR might finally be time to, break down. Obviously, the key level you'd wanted to break is 158, and 158 breaks. There's really no support until 143, and obviously I would say it's a much larger downside down to 118. But again, it is on support, right? So let's just say, for the sake of argument, what is the opposite that could kind of happen, right? So the opposite that could happen, and something you definitely should watch out for, is if FSLR, right, we know this is a support level. One thing it could definitely do, if like solar, money wanted to move into the solar sector, is push, kind of to this top of the channel to form one last divergent bar before it has, the much, fiercer, larger sell down. So that is something definitely to watch out for, which is why, I'm kind of insisting, like, hey, wait for, 158 to 155 to break. If that zone breaks, it's a very easy, short to the downside. If it doesn't break, you could still be at risk for that. So yeah, definitely watch your levels, right? The bull and bear levels. This is definitely gonna, provide a nice move. Let's look at the next one, which is crowd. And for crowd, it will at some point, kind of break over that level. Yeah. So it will at some point. We can see here, this is a very key level of resistance. So if I zoom in to the chart of crowd, you'll be able to see that right now we're just kind of just chopping, right? Since like the month of Feb started, and now we're, entering into March, we've just kind of been sideways for a crowd at a very significant resistance level. So again, you can see that this is kind of the channel holding a support, right? So if crowd, very simple levels, right? Break over 121, it has an easy gap to kind of fill up to 140. So again, a nice 15-20% move. You can catch the upside. And if crowd breaks below the support at 110, not even 110, I'd say this channel would break around 114, break below 114, we come back down to support at 100. So both bullish and bearish, right? Crowd is kind of offering opportunity. So yeah, just kind of set your levels and it should make for a nice move. All right, let's look at the last one, which is AA. And on AA, again, you'll kind of be able to see that if I, draw a trend line this way, kind of stuck tightly, right? One of two things is going to happen. It has broken this channel, right? The retest fails and we come back lower on A, right? Number one. Or number two is, again, it came back to support, right? That's one final move, to kind of retest previous support before we come back down. So yeah, I would say if it breaks over 50, then it should be able to move up to 60. But if it just goes up to reject 48 and breaks below 45, the next level of support is until 36. So that's what I had for A. Thank you guys. I hope you have a great week.